In today's video, I'm going to break down exactly how you can get $300,000. You heard that right, $300,000 in business funding in 2023. I'm going to give you the exact framework. I'm not going to gatekeep. This is all going to be gems. Some of the stuff you probably never heard of, and some stuff you're going to hear people take from this video. But before I get started, guys, let me know in the comments if this is your first time here. Welcome to my channel where we talk about leveraging credit to create cash flow. We talk about business and we talk about finance. All right, guys. So as you can see, the name of the title of this presentation is How to Get 300,000 Business Funding in 2023. Now you need to understand exactly what business funding is. So business funding is any type of funding that you can do for your business. It can be in the form of personal credit cards. It can be in the form of business credit cards. You hear a lot of people say business credit. Basically, that's just business credit cards. So this is not like net 30s or vendor accounts. That's corporate funding. That's not what we're looking for. That's all to generate a paydex score, and a paydex score is the worthless. It's the most overrated score that you can get. So we're focused on getting business funding in forms of business credit cards and business lines of credit. All right. And in order to do that, you need to have great personal credit. There is no way around that. I don't care what you hear the gurus say on YouTube. There is no way around having great personal credit, personally guaranteeing business credit card and business lines of credit in order to get business funding for your business in 2023 and beyond. All right. Long rant, but here we go. All right. So let's start. So what you're going to learn today in today's class is how to properly set up a business, bank data points that no one's talking about, LLC stacking. If you hear that term on YouTube, you heard it here first because no one's saying that. And now you're going to start hearing people say that. LLC stacking, I'm going to explain what that is. Ultimate lending list. I'm going to show you how to create that. All right. So what my name, who am I, and why am I credible? So my name is Toby. Obviously, if you've been watching, if you haven't and you don't know who I am, my name is Toby. I went from a 540 credit score to a 800 score in 11 months. I obtained well over 300,000 in business funding in over 14 months. I leveraged my credit to create corporate America, my corporate job. I purchased a restaurant. I do Amazon. I do some e-commerce stuff. So I also own a multifamily property. I did that through business credit and business funding. So that is why I believe I'm credible in order to, if you hear me talk about it, you know I'll be about it. All right. And this is just I'm all about transparency. I'm all about showing results. I'm not someone who likes to say the stuff and not actually do the stuff. So this is just a little bit of some of the results so you guys can see some of the my transparency. So all right, so here's just some results. I'm gonna go through this fairly quickly. This is not what this is about. I don't need to like prove to you, but this is just a little bit of some of the results I have obtained for me and my clients. Okay, so 6,500 here. You see the new American Express. You see $25,000 credit card. You see a $9,000 credit card. 30,000. You see 20,000, 10,000. You see 25,000, a $40,000 card. And this is one of the reasons you should be getting business funding, because this is one of my favorite quotes. It's better to be prepared for an opportunity and not have one than have an opportunity and not be prepared. I'm going to say that one more time. It's better to be prepared for an opportunity and not have one and have an opportunity and not be prepared. Guys, make sure you stick around to the whole video so you don't miss any gems, okay? All right. Some more results here: 15,000, 20,000, 10,500, another 10,000, 10,700, 25,000, 13,500, 10,000. Some other cards there. So what I like to do again, this is what this channel is about: leveraging credit for cash flow. That can be a brick and mortar, it can be an online business, it could be a personal brand, it could be e-commerce, it could be any of those things. It could be trucking, it could be your real estate business, it could be a barbershop, whatever the case is. You want to leverage credit for cash flow, or you want to leverage credit for income. Okay, you want to leverage credit for cash flow, and you want to leverage credit for income. All right. And this is just me against just some results, so you guys understand that I am very credible. This is when I purchased my multifamily. I use this strictly using business credit cards. Okay. E-commerce. All right, so now we're going to get into the stuff. All right, so in the credit world, there's this thing called stated income. And what that basically means is, so in the credit world, for credit on the personal side, there's this thing called stated income. Basically, you're going to put your income that on the application of what you're going to state your income. They're not necessarily going to verify that income. So that's why it's called stated income. In the business world, there's this thing called projected annual business revenue. This is the application normally. So what you would do in that case, you would put, if it's a brand new business, you can actually state your projection in business revenue that you think your business will generate in the next 12 months. All right. So you want to be mindful. You don't want to overstate your income, but you don't want to understate your income. You want to be optimistic in your business, right? You want to convey that you're confident that your business will generate a significant, not over significant amount of business revenue. That way you can get a higher limit. I'm not telling you what to put on the application. I'm just telling you it's just a projection of what you believe the business will generate in the next 12 months. All right. All right, so here are the very, very basic steps before applying for business credit. A lot of this stuff you should already know, but I'm just going to go through it fairly quickly so you just have a basic understanding, okay? All right, you obviously need a business address. Now, you're going to hear a lot of people say that you can't use your home address. You actually can, and it really doesn't affect your funding. And the reason it doesn't, especially if it's a home-based business, because since COVID, banks have understood that a lot of businesses can be run from home. Now, the downside is with a business address at home, it's public record. So someone can actually Google you and see where you live. So if you put an apartment, I can see who's registered under the LLC and see that business address, and it'll show up your personal address. So that's why you want to avoid it. But it does not mean you can't get funding from your personal address. So I just want to point out, because you'll hear a lot of people say, don't use your personal address. You can get funding with, I got plenty of funding on one LLC that I had as my home address. So it's not as important as it used to be, and you still could get funding on that. It's just that it's going to be public record. So just keep that in mind. So if you don't have a brick and mortar, if you do have a brick and mortar, you use that address. If you don't, you can use a virtual address. There's stuff like Regis's and things like that. But what I found for me, something like Anytime Mail, I believe it's called. Anytime Mail is a good option. It's like $9-10 a month. Anytime Mailbox, that's what it's called. You can use that service. It's like as low as $6.99, $9.99. That's what I use. So it hasn't given me any issues, and they'll just forward me the mail that I get from anything related to my business. I get forwarded to me. All right. Okay. For your business address, you want to make sure that you don't use a PO box. That's definitely you will get denied if you use a PO box. Banks don't like to see PO boxes registered for the business address because they can consider that fraud. So you can use your business address again if it's the business's own base. As an example, e-commerce, virtual address like Anytime Mail. That's what I use. A virtual address is basically like a virtual footprint that you can, or a virtual mailbox that you can get mail sent to that if you don't actually have a brick and mortar. So, all right, business phone number. Make sure you have a business phone number, not your cell phone. A 800 number could do it, or a local number. This is not as important. If I'm being 100% honest, from my experience, this is not as important to big banks, Chase, American Express, Bank of America. It's not really, they're not verifying your phone number. The banks who verify your phone number are local banks and regional banks. This is from personal experience. They'll actually call your phone number. This is more so for regional and local banks. They will verify things like this. So you should get something, like a business phone number other than your cell phone, but you can get it routed back to your cell phone. So this is not as important for the major banks, Chase, American Express, Bank of America, U.S. Bank. They're not actually going to call you, but this is more so for like when you're going for funding for regional banks, smaller banks, local banks. Business email, again, this is the same thing. This doesn't affect you as much as, with the big banks. This is more so for the small banks, the community banks, and the regional banks. They'll verify some of the stuff, and it looks more professional because they're underwriting mostly in-house. So an automated system like a Chase or American Express, they're not going to see. Like, they're not really going to care. All right. I don't care what, this is another thing that now you're hearing people say. I don't care what your gurus are saying. In order to get business funding, you need the 3 C's: cash flow, collateral, credit. I'm going to say that one more time. I don't care what your gurus are saying. You need cash flow, collateral, and credit, the 3 C's of lending. Now you're going to hear a lot of people on YouTube say that little catchphrase, say that little buzzword. Credit is the best option, especially if you're a brand new business. Why? Because I can open an LLC today, and within the next 7 days, I can get $50,000 minimum, easy, because of my credit. Because a credit is a resume to the lender. It shows how responsible I am with my credit, and I'll lend to someone who's borrowed money and paid it back, over a course of time. Okay, if you have cash flow, you can if you have some revenue generating through your business, you can present that. If you have collateral, they might ask for something like your business. Some you might have to put in business or some sort of real estate. But credit is the best because as long as you have great credit, you can always have access to business funding. All right, so credit is better because it's really just your word. It's just like your resume. Like you go for a job and they see your resume and this guy has great references. This guy has a great work history. So it's kind of like that when you're looking for business funding. So, all right. So here is the nitty gritty, guys. Don't forget to subscribe. Hit that bell notification. That way you get notified whenever I'll post a new video. Also, smash that like button. And let me know in the comments if you're enjoying this. If I'm dropping some gems here, okay? All right. So again, you're going to hear this term a lot. There's 3 tiers of banks. Okay. There's 3 tiers of banks. There's national banks, Bank of America, Chase, Wells Fargo, American Express, etc. There's regional banks that are only in certain regions that are restricted to you geographically. Key Bank, Citizens Bank, only certain regions of the United States have these banks. And then there's small local community banks that are only to that community, or very, very small banks in that community or locally in that city. So there's 3 tiers of banks: regional, small, and national. All right. Now here are the bank data points. All right. Generally speaking, you want a minimum of 680. Now this ranges. You're gonna hear some people say different scores. From my experience, a 680 minimum, a 740 preferred. 740 puts you in a different tier. 740 puts you in a totally different tier compared to someone even at a 710. It's just a different tier. I forget what it's called. It's like tier 1 in credit rating. So a 740 and above is better. No derogatory items, collections, or charge-offs. No late payments. Minimum of 2 years preferred. No late payments ever. Right? They can look past if your late payments are like 4 years old, but preferably you don't want any late payments. Okay, this is important. Credit card utilization under 30%. Preferred 0. You can get away with 10% or more. But I guarantee you, if you have a like I applied for a business credit card, and because my utilization was like 12%, I didn't get as much as I could have if it was at 0%. Because this credit utilization on the personal side affects your credit score, and those 10 to 15 points can make a difference from $3, $5, $10,000 in the credit limit. So no more than 3 inquiries in the last 3 months. Most banks are credit inquiry sensitive. So if they see a lot of inquiries, to them it appears that they're credit thirsty, and because the lenders want to lend when you look like you don't need the money. I know it sounds crazy. They want to lend to people who actually don't need the money, who appear that they don't need the money. If they do have the money, if they're applying for stuff, they look desperate. It looks like something. Why is he applying for 20 different cards? Is there something on? Did he get into a financial situation? So something must be going on. And that's how it appears to the lender. Does that make sense? All right. Some more bank data points. No more than 3 open accounts, open credit cards in the last 6 months. Again, it's the same. It kind of applies with the same principle with the inquiries. If you're applying for all these new accounts, they're gonna start to ask, why are you applying for all these accounts? Did something change financially? Do you need more money? So you don't want to appear as credit thirsty, as they like to call it, to the lenders when you're looking for funding. It doesn't mean you won't get approved. It just means that you might not get approved more. You might get more denials than approvals. Also, 2 to 3 credit cards preferred with major banks: Bank of America, American, Chase. No vendor accounts like Best Buy. Like, you don't want store cards. you want major banks. You want major banks. Like on your personal side, you want really major banks, tier 1 banks. Chase is great, Bank of America, American Express. You don't necessarily want those Macy's cards or credit cards like that. You want big banks. It just looks better. It's a different tier compared to the other cards. Also, 5 primary accounts. Preferred is 10. You really want a 10 primary accounts, and also a mix of credit. You want some installment loans, a mortgage, student loans, some credit cards, and things like that, because it tells the lender that you are responsible. You can manage multiple accounts and still be able to make the payments and still can be responsible. So you got to put yourself in the lender's position and they can look at that and see that you're responsible across all different accounts. Credit card limits, minimum of $2,500, preferred $10,000. And the reason is because they want some comparable credit. They want to compare your personal to see what they can give you on the business. They want to see what they can give you on the business. They want to see what they can give you on the business, and they compare it with some comparable credit that you have on a personal credit card, on a personal side. So if you have a $2,000 credit card, why would I give you $30,000 on the business side? Doesn't necessarily make sense, right? You haven't shown me that you can manage a large limit like that. So if you have a $10, $15, $20,000 personal credit card on the personal side, and you've been making payments on time, no issues, then they're more willing to give you a larger limit or the same limit on the business side. So just keep that in mind. All right. Some data points to maximize funding. Now, a lot of people don't know this. Banks have an internal rating system, and it goes by these numbers. So low rating, this is just on average 3 months, right? This is on average of 3 months. So low rating is 1,000 to 3,000. Let's call it 4,000. So anywhere between 1,000 to 4 months, 4,000. Average of 3 months. Mid rating, 4,000 to 7,000. High 4 rating, 7,000 to 10,000. So what you want to do is, and so on and so forth. What you want to do is pump as much as you can cash in your account before applying for business credit cards. And the reason is because you are higher likely to get approved and higher likely to get larger limits. It could be a difference between a 20,000 and a 50,000 because number one, you're building that relationship. Number two, you're showing that you're depositing large and consistently large amounts of cash into their institution. So they want to be generous in their limits to you, so you can continue to do that going forward for a long period of time, for years to come. So that's why you want to pump as much cash as you can into that business checking account before you apply for business credit card. This can make a big difference. I know from personal experience. So you have to be strategic into how many times you want to do this and which banks you want to do this with, because then your money be tied up. So you just want to make sure if you want maximum funding, this is a play to do. All right. So the LLC structure, let's just kind of recap. All right. So you got an LLC, you got an EIN, you got a business address. It could be the virtual address or home. You have a business email and a business phone number. Again, you want to avoid high-risk industries such as real estate, credit repair, trucking, anything with CBDs. Best industries, I should say, from my experience, have been consulting, e-commerce, and marketing. This is from my personal experience: consulting, e-commerce, and marketing, because those are low risk considered to the lender. Now, I know now there's starting to be some data points that consulting is even considered. It's starting to be considered high risk. But from my experience, these are the 3 ones that have worked for me. All these data points can change at any time. What could work today may not work tomorrow. So just keep that in mind. All right. This is a term I created. Now you're going to start hearing a lot of people talk about it. LLC stacking. LLC stacking. What does that mean? All right. You want to age and stack your LLC. So let's just say once you have an established LLC set up properly, you get funded $50,000 on that LLC. You can create another LLC and repeat the same play for that bank with the new LLC. You use the funds you get funded with your LLC to purchase a new LLC, and you rinse and repeat. There is no limit to the amount of LLCs you can create and get funded for. So each LLC can, in theory, get funded $50K each. Now, the best thing is you also want to let your LLCs age, because after 2 years, you're eligible to, for most banks, they require minimum 2 years to in order for you to get business lines of credit, which are way better than credit cards. Business line of credit blocks are cash in the bank. If you get a $50,000 business line of credit, no doubt, that's $50,000 in your cash in your bank. You don't have to figure out ways to liquidate the card or anything like that. This is $50,000 cash in your bank. You get it within a day or two, and you can withdraw from that money. So it's a way better than a credit card where you have to get creative and find ways to liquidate it. I do have a anyway. So you want to let your LLCs age. Again, you stack your LLC. So you got an LLC. You go to a bank. You get funded. You know all the data points. You know what bureau they pulled from, what score you had, what the accounts, what inquiries. Then you get another LLC and you run the same play with that bank because you know all the data points. All right. Ultimate lender list. All right, this is something that most people don't talk about. I've done this. This is all from personal experience. You want to interview local banks by asking them certain questions. Then you want to add that to an Excel sheet. Things to keep on Excel sheet. The requirements for each product, which bureau they pull from, what score you had with the approval, and then you can rinse and repeat with your LLCs and stack all the LLCs you created. You keep all the data points that you have from each lender, each bank that you applied for and got funded for. You can see what the approval amount was for, what bureau, what score you had, et cetera, and you can build an ultimate lender list because you know what they can approve you for, you know what on average they'll approve you for, what score you had, what bureau, and then you can run the same play with another LLC. All right, local bank secrets. All right, so local banks are portfolio lenders, meaning they make their own rules on how they lend money. They have an interest to lend out to local businesses within the communities. And another key part is most local banks have in-house underwriters. Most of the time, it's not an automated system and like they're not approving it automatically like a Chase, right? It's all done through an algorithm. Most of the time for a local bank, it's actually in-house underwriters that actually view the application. They might Google you. They might check your website out. They might call your local phone number. So local banks are great because you can negotiate with that. You're face to face with that underwriter. You can communicate with that underwriter face to face as opposed to an automatic approval. You can provide some insight on why, if they want to deny you, why they should overturn that decision. So it's a little bit more personal, and they lend their own money, so they're not confined to a certain algorithm like a Chase or Bank of America or American Express. So it's a little bit more lenient with their lending. All right. And that is it, guys. Let me know in the comments if you have questions. Join my free Facebook group, link in the description. Subscribe to my channel. Ask any questions in the comments. I will answer every single question in the comments. Make sure you rewatch this a few times in case you missed some things. That's my time. My name's Toby Rosario. Peace.